Hey everybody, hope everyone's doing well and had a good day today. In this video, I will review the Emini 5-minute chart from Tuesday, June 17th, 2025, and then I will show the marked up PowerPoint slide at the end of the video. The first thing I want to talk about on this chart is the gap down. I typically show these in the reviews, but what I'll do, especially when there's a gap, is I'll look at the Globex session going into the day, and I'll usually look at the 15-minute chart. So let's scroll back to as if it's real time. So here's pretty much the open of the day. This vertical line is the close of the day session, the regular trading hours yesterday, 4:15 p.m. Eastern time. So from the vertical line here to the edge of the chart is the overnight Globex session from yesterday into today. It's important to look at this, especially when there's a gap, just to get a better understanding of what the context is in the market going into the day. So we had this big bear breakout from yesterday's close and a big two-legged pullback, one pullback, two, and then the bears eventually got their channel phase, so basically a spike in channel. At this point, you'd probably say the market is in a broad bear channel or a trading range at this point. So we have swings in both directions. Stop order bulls can make money, but we're still getting lower highs and lower lows, and it's after this bear spike. So bear spike in channel, and you expect the channel phase to evolve into a trading range, and at a minimum test the beginning of the channel. It often becomes the top of the trading range. So this horizontal red line might be resistance later in the day. Let's call it 60, 80. So we can carry that into the RTH chart. But expectations here, what's the always in direction? The last major breakout, the dominant feature of this chart, is the big bear breakout. There's a big breakout here, big breakout down, and same with this one here. But these are all minor within a trading range. How much of this bull breakout is actually breaking out to the bars to the left, or how much of this bear breakout is really breaking out to a new low? There's a lot of overlap here. This rally is strong enough for a second leg. This is probably a pullback, and we might be on our way back up for a second leg. But I suspect there are sellers above, possibly at the start of the channel, and then maybe the bears will ultimately get a second leg down similar to this breakout in the early parts of the Globex session. In other words, maybe bear breakout, spike in channel, evolves into a trading range, and then another bear breakout. So let's keep 60-80 in mind as we go back to the RTH chart. And that works out because it looks like that's the breakout point, just about the low of bar 71 yesterday. So gap down going into the day. You can think about the gap down as simply a bear breakout, gap, climax, trend bar. It's all the same thing. And I don't have time for a true bar by bar review today, so I'll kind of just scroll through the day, a couple of bars at a time. So 80% of the time on the open, you can expect a trading range, and usually the first directional move has at least a minor reversal 80% of the time, which, in other words, only about 20% of the time you get a trend from the open like yesterday with really no significant pullback. So we're getting a trading range open, bars 1 through 6, and we have the gap down and a breakout point above. It's possible we have to test the breakout point above, but if we do, there's probably sellers above. I'm just drawing yesterday's low in blue. So this is also, the gap down is an attempt to break out below the low of yesterday. It looks like we're finding buyers below. We tried once, reversed, tried a second time, reversing up a second time. So there's a second reversal, buy above bar 4 for an opening reversal swing trade. And now we have 3 or 4 consecutive bars up. Probably we'll get a second leg, maybe buyers at the midpoint of the leg. That takes you back to yesterday's low. Probably buyers in the buy zone of bar 6. The point is the rally 3 through 6 is strong enough for a second leg. Or in other words, the bears need at least a micro double top before reversing it. Is bar 7 a micro double top? We went up on 5, went down on 5, up on 6, down on 7. It is a micro double top, but now it's a 5-bar micro channel. The odds are there are buyers below, and the first reversal will be minor, and then we'll probably retest either the close of 6 or even the high of 7 before we get down to the low of bar 3. And we reverse back up quickly. Fairly tight channel, still a micro channel actually from bar 3 to bar 9. But now we're testing the breakout point, and this was also the start of the channel on the Globex chart. So this horizontal red line around 60-80 is expected to be resistance. Now we have 2 or 3 pushes up. You can draw a channel line here. And bar 9 is actually breaking out above the channel line, so the expectation is sellers above and a test of the trend line. It's a very tight channel. The trend line is not far below. And we got the test within 2 bars. What about selling below bar 10 or bar 11? It's reasonable. There's 3 pushes up to a breakout point, and the gap down will probably get a second leg, but the rally is tight, and the rally from 3 to bar 10 might need a second leg up of its own. So this reversal might be minor. And the best the bears can hope for is maybe just a 50% pullback of this bull leg, and you can see we're testing it on bar 14. Now we have 2 legs down, testing the 50% pullback. The bulls may need 1 more leg up before there's any major reversal. But 14 is a bad buy signal, so probably sellers above. We vacuumed down a little lower, but now we're testing the bottom of the 3rd push up, depending on how you count the pushes. If 3 is 1, and 6 or 7 is 2, and 9 is 3, we're testing the low of the 3rd leg, usually going to be support there. Tight channel, it's 3 pushes, but you're going to expect a minor reversal and then trend resumption. In this context, trend resumption, I call it trend resumption, but almost every bar has been completely below the moving average today. And we had the gap down going into the day. So all of these bars might be part of a bear trend. This is a bear regime, and a simple way to determine that is to simply look at the moving average. So what's the significance of that? Setups for the bulls are going to work less frequently, and things for the bears are going to work more frequently. But this is a high 2 above 16 after a rally that is probably going to get a second leg up. The problem with the rally or trading for the second leg up, it's probably a scalp. As far as going for a swing trade today, we might need to see more buying pressure. And now we have a 3rd push down to bar 18, testing yesterday's low again, probably support here. 18, maybe more of a buy the close bar. It's a bear trend bar, but it's leg 3 testing support. Reversal up 19, probably reasonable to buy above 19, but big bar, so big risk and forcing you to buy directly below the moving average, which is not ideal. Small follow through bar, 3 pushes down, reversal follow through, probably go at least a little bit higher, test the high close of 9, maybe even a new high of the day. But even if we do, probably sellers above. 21 vacuuming up to a new high. What leg is bar 21? It might be leg 3 if you count bar 1 as the first leg, pullback, second leg, deep pullback, third leg. Big, small, big, strong enough rally for a second leg, but bad location to buy here. 21, not ideal for buy the close, probably buyers on a pullback, maybe at the high of bar 20. Reversing down, but probably just a pullback and a minor reversal. We need a micro double top to reverse the rally 19 to 21. That's not necessarily what we need as far as needing a micro double top, because a climactic reversal doesn't really need a good topping pattern. It can simply quickly rally and then quickly reverse down. But because we have decent bull bars here and a micro gap, a couple of micro gaps, I suspect there are buyers below and at least one more leg up for the bulls. The bears, where's the reasonable stop order swing trade? Really doesn't exist here. Bar 22, big tail below and following a fairly strong 3-bar micro channel. Very deep pullback. What about selling? Is it sell to close 24? The problem with 24 is similar to the problem with 15 and 18. We're testing the bottom of the third push up. Again, if it's 1, 2, 3, this is the start of the third leg. Probably support here. What happened on bar 18? If you sold the close of bar 18, if you're a bear, and let's just say you used a very wide stop, and your stop is a measured move up, and you sell more at a new high, what are you going to do as a bear if you sold the close 18 and got 19 through 21? You're going to be relieved if the market comes back to your break-even price. So there's probably buyers here because of the bears who got trapped into selling low. And there's also buyers because of the bulls. The bulls see the rally to 21. They know buying up here isn't ideal because of the trader's equation. The stop is far. To buy the close of 21, you have to go for at least 1 R. That's all the way up here, and it's leg 3 at a new high, and we still need a follow-through bar, which the bulls did not get. So rather than buy here, the bulls will buy a deeper pullback, whether that's the high of 20, the 50% pullback, maybe even the low of the third leg, where bears got trapped down here. So 3-bar micro channel back down, but now we're in a support zone, probably buyers down here. Bears probably need a second leg down after 22 to 24, but the pullback could be deep. And then we're stalling. So as far as selling here, if you're selling here, you're selling at support. Yesterday's low, the market rallied here several times. If you're selling here, you really need more bar to 24. If you start getting pause bars and bull bars, probably better to just exit shorts and look to sell higher. So 27, maybe a bit of a give up bar, second leg up likely. Also, I've had more of a focus on day structure. Usually by bar, there are different milestones throughout the day. You've got the first hour, bar 12, then you got bar 18, bar 24, and the more and more bars that get added, the more information we get, the more of an idea we have for the type of day that's ahead of us. Now, at this point in the day, the range of the day is about 20 points, and the recent average is about 80 points. So we have an opening range of about a quarter of the size of the recent average, and you expect the day's range to expand and get to the, you expect the day to be average. So the expectation at this moment is that there's going to be range expansion, and maybe we don't know which direction, but there's probably going to be a measured move of the range at this point, or maybe just the opening range, maybe use bar up to bar 9, probably going to be a measure move up or down, just because you expect the daily range to grow to an average size. What's happening here? The bulls have a double bottom. They have a breakout, a pullback, a second leg, a pullback, maybe an attempt at a third leg, but the bear breakout to 24 will probably get a second leg, and there's probably sellers above 21 if we get there. And then look at the bull breakout. Decent bar 27, but deep pullback. Bad low 1, buyers below 27. Bad low 2, below 29, buyers below. Second leg of the bulls, 1, pullback, 2, or 1, 2, 3 pushes. Probably sellers above 29, but as far as selling, maybe you sell 31 for a scalp, but better to wait if you're going to sell for maybe the stop order swing trade. Sellers on 31 for a scalp, but then buyers below. Bulls, maybe they get 1, 2, 3 legs up, and they're getting the third leg here. But what's happening on 34? Similar to what happened on 24. 24, a bear breakout bar, and then a doji, and we're at support. So that's a problem for the bears. Bears selling here, let's think about it like this. Seems to be decent momentum down to 24, but then you get a doji, 25, and that's not good momentum. And if you're selling and you're a bear and you're selling below the moving average at support, your premise for selling is invalid. You're not selling value, you're selling momentum, and now there's no momentum, so you need to get out. And it's similar here. If you're buying 33 because there's a trend bar and it's momentum, first of all, the momentum here really isn't great. It's actually a nested wedge. And there's different ways to draw it, and the shape isn't perfect. This is actually, at this moment, a truncated wedge, where the third push does not exceed the second. So 1, 2, 3. You can call it a head and shoulders top, left shoulder, head, right shoulder. Doesn't matter what you call it. It's just the energy that matters. What's the momentum, and where's the support and resistance? We're at a resistance level, and the momentum is not great. Do the bulls have consecutive strong bars or micro gaps, or many bull bars closing near their highs? There's 2 bars closing near their high, but other bull bars have tails above, and there's really no consecutive strong bull bars. If you're buying 33, you're buying momentum because you're above the moving average, and you're not buying value, so you need momentum. And then 34, not momentum. It's a late leg, 3 or 4 pushes up, nested. So probably sellers on the close 34. The upside here might be really limited. And then that's a reasonable stop order sell 35. And the reason I thought about day structure around here and at this moment is because if we think ahead to what the day is going to do, I said the range is probably going to at least double. And is it going to double to the upside or the downside? We don't know at this moment, but there are hints with the gap down. This is a possible wedge bear flag. And what might end up happening today is we get an upper trading range, a bear breakout, and a lower trading range. I think at this moment, it's setting up to be something like that, at least until we get more information and it looks more bullish. But right now, always in short below 35, probably reasonable for bulls to exit, and bears can sell below 35 for a swing trade. 37, another good-looking bull bar, but might be leg 4 or even leg 5. So it's basically a high 1 at the top of a trading range. And you can take high 1s when they're in strong bull breakouts, but this is leg 3 or leg 4 at the top of a range, testing resistance. So this is more of a fade. It's also a 3-bar micro channel, 34 to 36, sellers above, second leg down likely. Plus with the sell-off down to 24, still needing a second leg, This could all just be a pullback before a bigger second leg down. So this is also a micro double top, sell below 38. Breakout bar 39, second leg down likely. We test the breakout point 37 low, and there were sellers above, and the bears got follow through, breakout and follow through bar. Not an ideal follow through bar, it's a big trading range bar, but it did close below the open and below the midpoint, and there's nothing to buy. 3-bar micro channel, sellers above, might be sell to close. And until there's a reason to buy, it's okay to sell and stay short. Now we're testing support, but is there a stop order buy? No. And then we get another give up bar, 42. So we break out to a new low and we find buyers. Is 43 a good stop order buy? Is 43 going to reverse 38 through 42? Probably not. So probably sellers above. This is likely a minor reversal, and we'll retest the lows of 42. And if we do get a measured move down, possible targets are a measured move of the opening range. We might get a measured move of the gap down, which is slightly lower. So there are magnets below, and this bear breakout may have reset the count. Wedge, bear flag, new breakout, and the market cycle resets. Maybe we get a channel. New breakout 45 to 48. Leg 2, but strong enough to reset the count. This needs a second leg of its own, so always in short, no reason to buy. 49, a big bull outside bar, but bad context. Is it a high 2? Maybe you call it a high 2, but because of the breakout to a new low, the count might reset. So maybe this is a high 1 in a tight bear channel. Big bull bar. The risk with buying here, you have big bar, so big risk. Less than 1R for a scalp to the moving average. And the bears might see this as a discount. We have a tight channel, and all of a sudden we get this big bull bar closing near its high, testing breakout points. Bulls who bought here are trapped. Let's just draw that. Bulls buy at the low. They get trapped on the breakout. 49 retests the breakout point. If you're a bull and you bought here, scaled in lower, you're probably going to exit at break even at this breakout point. 49 is a big enough bar. It may get a small second leg, but the reversal is still probably minor. And then 51, the upper tail on 51 may have been all the second leg that the bulls get. 1, pullback, 2, give up bar 52. Now, increased risk selling 52 because it is 3 legs down. It's a parabolic wedge, 1, 2, 3. Third push, breaking out beyond the channel line. So the channel line from 42 to 49 is how this is drawn, but then the channel line from 49 to 52 is even steeper. That's parabolic behavior. It's unsustainable. Bears at some point were far below the moving average. 3 sell climaxes. Bears are going to look to take profits, and bulls see the value as low enough to start buying. And if we're at a measured move target, it's more of an incentive to buy. So we're at that measured move target of the opening range, 3 pushes. Some traders will start buying here, but probably better to look to buy to take profits rather than look to buy to go long. Probably better wait for more information before buying to go long. And parabolic wedge, you expect a minor reversal and then trend resumption. Is it going to be a bear trend? Is this a bear trend day? Probably not. Lots of two-sided trading through here. This structure looks like it's shaping up to be an upper trading range, bear breakout, and a lower trading range. And 52 might be testing the low of the lower trading range. And where's the top of the lower trading range? Might be the bottom of the upper trading range. So maybe somewhere up here, around the start of the third leg down. The bears get minor reversal, another leg down, probably low in a trading range at this point. So the downside might be limited. Still a tight channel, nothing really to buy. Better to wait for a trend line break and a retest before buying. Another wedge, 1, 2, 3. Not a great shape, but it's a 63 is breakout of a double bottom, so that's 3 pushes down. It's a variation of a wedge. Bad signal bar, 63, probably sellers above, and a minor reversal. But if it is a trading range, we could test all the way back up to the 54 high. 1, 2, 3. Maybe get 10 bars, 2 legs, sideways to up before we retest the lows. Bad signal bar, wait for the second entry. We get it on 65. 65, a reasonable stop order buy. Breakout to the moving average, probably some traders will sell here to scalp. We're also testing an area where traders got trapped. It's a double top with 57. But enough of a rally for a minor reversal on the second leg up. So we pause at the moving average, but we find buyers below. And again, we get the second leg up here. This is the lower trading range. There might be some more room to the upside. Maybe again we test the 54 high, but if we do, probably sellers above. This is much stronger selling than the buying pressure down here. Might be 1, 2, 3 legs up, testing the start of the channel, probably limited upside, sellers here, and a risk of a downside breakout. One more final push up, but it looks like it's leg 4. Breakout of a bull channel line and the high of 54, so a double top. It's a dueling lines pattern, double top, and basically a wedge bear flag, wedge double top. 76, more of a sell the close bar. Traders sell it and they make a scalp. This is something I've been thinking about for system when you have a situation like this for mean reversion, for fading breakouts. And not ideal for this example because it's late in the day, later than I'd want to trade it. But 76, you have at least 3 legs up, if not 4 legs up. It's a dueling lines pattern, again, so multiple resistance areas being tested with a bear environment. So what about selling the close 76? You put a stop, a measured move up, and then you target the low of the bar. And you want that trade to work quickly. And that was a good example of it. Big up, big down, and looks like a trading range, probably going to go sideways into the end of the day. 77 looks like it needs a second leg down, but lots of overlap with the prior bar, so there may be a deep pullback first. And we're pulling back into the bar, maybe midway up the bar, but the bears ultimately got their second leg down. And then just quickly, the daily chart. Let's turn it to the Globex chart. So the gaps are a little different, the bars are a little different. Here's the context at this moment in time on the daily chart for the Emini. Tight bull channel, bars completely above the moving average, and we've had a leg down to the moving average, deep pullback. We're getting another attempt down to the moving average, but there's really no credible trendline break through here. This is a minor trendline break. There's nothing like, even back here, here's a tight bear channel. This trendline break was pretty decent relative to this one. So the point with that is I suspect we're still in this bull channel. There's probably buyers below, buyers at the moving average, a couple of legs down. In a bull regime, probably buyers below yesterday's low on the Globex chart. And the downside might be limited. This may eventually evolve into a trading range, and if it does, we could get all the way back down to here. Is this the start of the correction back down to here? It might be, but there's a lot of overlap and still many more bull bars than bear bars. Fairly tight bull channel up, and the trendline break again wasn't very strong. So we may continue to go sideways here. But at some point, the bulls get exhausted and they look to buy lower, and that contributes to the selling. The bulls are taking profits at new highs and looking to buy lower. The bears are selling highs, scaling in, expecting the channel to evolve into a trading range and eventually test somewhere down here. Maybe not all the way down to here, but maybe the bad stop order signal bar here. We tested it a couple of times here and here. Maybe that's a magnet that we still need to come back and test. That's it for the chart review, and I will post the marked up PowerPoint slide right after this clip, and I'll let it stay on the screen a little longer than usual to make sure that the things that come up at the end of my videos don't block the chart. Here's the marked up chart. I mentioned in the video that today was a type of trending trading range day. If you look in Al's trend book, he talks about trending trading ranges like this, where there's a trading range, whether it's an upper trading range or a lower range, and then a breakout, and then, if it's an upper range, there's a breakout, then a lower range, or a lower range, and then a breakout and into an upper range. This was one of those days, and because of the appearance on the daily chart, where the day opened relatively close to its high and closed fairly close to its low, it has a trend bar appearance on the daily chart, and because of that, this might be classified as a trend day, even though when we look at the 5-minute chart, the trading range behavior is the dominant feature of the day. Pretty much all trading range sideways through here, with a brief period of a bear breakout, and then more sideways down here. So I'll just leave this for another minute or so on the chart so that everyone can get a good look at it. Pause the video, maybe compare your chart markup to mine. I also included some stop order entries with those green and red arrows, along with the support and resistance. But that's going to do it for this review. So thanks everybody for watching and listening, and I hope everyone has a good night.